Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia and broadcasted out of their offices in Kuala Lumpur. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming out to us out of Singapore. Vishnu, great to have you on the show.
Always good to be here, Brian. Thanks for having me today.
Now, Vishnu, we're going to start by taking a look at crypto markets, which are down over the weekend. Bitcoin is at 33,762. It's down 1.85%. Ethereum is at 2,472.8. It's down 2.53%. Now, looking across to regional stock markets, we've got the Straits Times Index, which is at 3,288.66. It's down 0.1%. Bursa Malaysia is at 1,552.66. It's down 0.75%. Shanghai is bucking the trend just a little bit. It's at 3,003.09, up 0.05%. The ASX All Ordinaries is at 7,361.1. It's down 1.43%. The Nikkei is down even more sharply at 26,371.5. It's down 2.34%. The Hang Seng has taken a bloodbath. It's at 20,001.96, down 3.81%. And rounding up the numbers, we've got the Kospi, which is at 2,608.52. It's down 1.38%. Now, Vishnu, that's a sea of red, not just a sea of red, but a bloodbath in some markets. Tell us why.
Well, it does appear that markets are still brooding over the fact that with a very aggressive Federal Reserve, you're going to get much higher interest rates. And I think this is a tipping point where they're beginning to think whether the Fed might overdo it and lead to a hard landing. Of course, that's the worry much further out. But in the interim, whether or not we get to that kind of a downturn, there's still that worry of how we're going to handle a situation where interest rates have risen so dramatically. Just to give an illustration, you had your 10-year yields that were between 1.5 to 1.7% in the very early part of this year, late last year, and then you've got it at testing 3.2% just over the last few days.
So I've just put up your charts to help illustrate that point. Then,
sure. I mean, and that's the point, and that's really the trouble with it. The fact that you've got a situation where the 10-year yields, if you may, the 10-year yields have gone up really sharply here, and the trouble with that is markets are beginning to come around to the fact that there are two things happening here simultaneously. One is the Fed is going to hike rates at a very rapid pace, even though Fed Chairman Powell said they're not considering a 75 basis point hike, which temporarily gave some relief to markets. I think markets have come to realize, no, that's not actually a relief, because they could still do a sequence of 50 basis point hikes, and they may end up somewhere around 3 to 3.5% by the middle of next year in terms of the very, very short-term rates. And the long-term rates may very well head up much higher. I'll just very quickly illustrate a point here. This blue line you see here is inflation expectations, and you can see 10-year yields overshot them by a lot. This typically happens when the Fed is tightening very aggressively. They're doing rate hikes. In this period, they're doing rate hikes, and they were doing what they call the balance sheet runoff or quantitative tightening, where they're draining US dollars from the markets. And they're going to start draining US dollars from the market at a faster clip by June, which means there's a very high likelihood we're going to see another overshoot. So markets are perhaps worried about interest rates, 10-year, longer-term interest rates very quickly rising to 3.5% kind of ballpark. And that's something that they're going to deal with alongside actual quantitative tightening, which means dollar funding becomes more expensive. That's going to erode profits, so on and so forth. For emerging markets, the other trouble with this is that not only do you get higher interest rates, shortage of dollar liquidity, you also get a stronger US dollar. This chart here shows us from 2012 policy rates by the Federal Reserve. You can see whenever the Federal Reserve hikes rates, the dollar, this is the dollar index, the dollar tends to rise in anticipation and tends to peak out quite quickly. This dotted line here is our the market's expectation of where Federal Reserve rates will go by early next year. So one may argue that actually the dollar is as high as it needs to be. It will probably plateau from here. What this doesn't consider, however, is the quantitative tightening, the balance sheet runoff effect, where the actual supply of dollars being drained may see the dollar going stronger for a while longer, which means right now, heading into the middle of this year and maybe into the third quarter, markets may be very fearful of high interest rates, trouble getting dollar funding or very short-term rollover, and an expensive US dollar that's going to exacerbate imported inflation and also going to pressure currencies. And those are probably the things that markets are really being troubled by right now without any further clarity. Let's not even mention the Ukraine situation where Europe may curtail further Russian oil supplies or dependence on Russian oil supply, which almost means that oil prices must get higher.
So, and speaking of that, Vishnu, what's your take on this impact now on our regional economies?
I think the regional economy is really being tested by a few factors. One is the Fed factor that we just discussed at length. The other is the China's zero COVID policy that a lot of us are beginning to believe is going to stay at least until the fourth quarter of this year. So a revival for the tourism, travel, hospitality industries, all that is going to be set back because overall the region has got a fairly high dependence on Chinese tourists, anywhere from 15% to almost 30% of tourist arrivals. There had been in very recent years a huge dependence on Chinese tourists. So that's another setback that markets are worried about. High commodity prices is also beginning to hurt. And the other aspect of this is as the Fed is raising rates, there's collateral damage in the sense that a lot of the economies will start getting worried about whether their credit ratings will take a knock, in which case the ability of the government to say, let me subsidize oil or food prices becomes very constrained because spending money you don't have usually means it has a bad impact on your credit ratings, which economies cannot afford now. So at a very early stage of the recovery, we are being tested on multiple fronts, and that's really what the region is. This is really why we have knocked down some of our growth forecasts for this year lower, but we do not think that this is going to be a downturn at this point. Really depends on the Fed's path, and our downturn risks are really backloaded at the back end of 2023 if the Fed indeed digs its heels in and hikes rates despite the fragile recovery.
Okay, so that's interesting. So you've back-ended your forecast of a downturn to basically the tail end of 2023. That's an interesting takeaway from today. Finally, before you leave, Vishnu, what are some key things, data points, and events that we should look out for this week that will move markets?
I think markets remain quite fixated on inflation, particularly inflation out of the US. So with your CPI, PPI prints, they're probably going to really try to read the tea leaves on that now more expensive tea to see what the US is going to do with it, particularly the Federal Reserve. And I think we are also going to look for headlines on Ukraine, because for a while markets have lost sight of this for multiple reasons, and they're going to reassess commodities. And speaking of commodities and prices, I think there's also going to be an attempt to get a better feel of how supply chain disruptions due to the situation in China. I think that aspect of it is also going to remain worrying for the markets, at least for the next 2 to 3 months.
Now, Vishnu, as always, thank you very much for taking your time to be on the show.
My pleasure, Brian. Thanks for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video will be on our various social media platforms as well as our website, www.biztech.asia. It will also be on Rajhi Bank's social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.